welcome. It's India Market Open and it's finally Friday. Welcome back, Niraj, but you're off on a holiday anyway.
Yeah, but see, I'm here for the most important day because we've had 2 strong days of gains. And I think between you and me, we should try and get from our guests today as to what to do as we approach the weekend after having 2 strong days.
Not to do much on the weekend, I would
Maybe
say.
that too.
Get a drink would be advisable.
No, but right now, for the next
today,
8 hours.
You mean today. We've got to still keep the focus. It is still Friday. We do still have a day ahead. But the good news is, the fact remains that earnings is pretty much behind us. Focus is going to be back on macro cues, global cues, and of course, all eyes will now be on the political setup. A quick check on the implied Nifty. It's looking like another strong day, and that's good news coming in for the street. Opening around 22,000 is what we're looking at in early trade. A quick check on what happened across the world. Asian markets are having quite the field day. Japan has chosen to ignore the fact that it's in a technical recession and is actually gaining in trade this morning. Bulls, of course, looking at the brighter side of things, they believe that if Japan continues to remain in a recession, the ultra-loose monetary policy will be a big boost coming in for equity markets, and that explains why you're seeing Japan in the green this morning. It's off the day's high point, but still looks actually pretty good. Apart from that, China continues to remain shut, so they continue to be in celebration. Nothing much happening across those markets. The rest of Asia as well, not doing too badly as we see it. Well, Wall Street as well clawed back its losses from the first half of this week. Remember, inflation data came in higher than expected in the US, which means that the rate cuts have been pushed down the road. But this morning, or rather last night, retail inflation data came in lower than expected, which also means that while inflation is a worry, spending in the US is also looking slower. So you've got 2 opposing data points, and that will be, of course, the key triggers in terms of what the bears and the bulls do. Just like Japan, you also have US investors who are cheering the fact that lower spends or lower retail inflation could potentially encourage the Fed to come across with those rate cuts despite higher inflation numbers. So mixed cues there, but decent earnings as well on Wall Street. The focus will again be back to what happens in the macros. You've got some more data out of the US later today, and that's largely what it is. But interestingly, it was another record close of the S&P 500 on the same week that the Dow saw its biggest fall in over a year, reacting to inflation. So lots of records, and these records happen so frequently these days, especially for global equity markets, right?
But I wonder, Samina, if indeed what you just said is probably the key factor, that if indeed economic data the world over is looking sketchy, and in India too, there are points to ponder, and we'll come to that. But does that spur the Fed to do something which in the commentary thus far is not coming out?
I mean, it's a tough job if you're the Fed chief. What data do you pick? And you're also going to elections in the US. Let's not forget that, right? I mean, it'd be interesting to see how historically the Fed has behaved during election time. When it comes to rate decisions. But so those are the cues. You had the bond yield fall actually quite sharply on back of that in retail spend data. The dollar remains around 104.25. Bitcoin's been in a sweet spot, so sustaining bar levels of 51,000, and that is significant. So you've got other asset classes that aren't doing too badly, and so are equities. Equities have been in a pretty good space despite everything.
Yeah, and sorry, just before the trade setup, since you mentioned Bitcoin, I was reading the Greed and Fear note this morning. I think Chris Wood and team are allocating 10% of the Greed and Fear portfolio, unless I'm very wrong, 10% of the Greed and Fear portfolio to Bitcoin. So, you know, it's making its presence felt in 2024.
And it's done its time, right? It's spent the last few years being debated, and now finally with its launch on the exchanges is a huge sort of sign of regulation giving it a thumbs up. But Niraj, what are we gearing up to? Implied Nifty is looking good. I'm hoping we're reacting to these global cues, and we'll stay with that. It is finally Friday, which I guess, and we've had a pretty hectic week.
Very hectic week. And you know, the technicals for the last 2 days, viewers, have kind of shown a bit of the hand of the market. So if you just look at the Nifty behavior, just the Nifty, okay? And remember, viewers, I mean, to a credit on trade setup, we spoke about it for the last 3-4 days, that the quant indicators were indicating that the 21,500 level was a level that was very difficult to break. We haven't done that. And for the last 2 days, Nifty has been forming higher highs and higher lows. So in technical parlance, that's the limited technical understanding that at least I have. I don't know if Samina has more, but that is an indication, or that is a pattern that a lot of people follow. But when you look at the options data, which is maybe from a data perspective a lot more easy to decipher, right? Just look at the put versus call writing. not at the lower strikes, but at 22,000 or 20,100, you've seen a significantly higher put writing versus call writing. Now, typically call writing being higher at the higher levels adds a bit of a cap to those upsides, right? Now you're seeing put writing happening there. Are people confident that in the current expiry, the index will actually head higher based on what's happened in the last 2 days? So I think that's the question that you've got to monitor. On the index perspective, that seems to be the key thing. Plus the global markets doing what they are, the implied open suggesting what it is, very likely that the put writers will actually have their day in the sun. Maybe the call writers won't. And from a sector perspective, frankly, yesterday was a return of the PSUs, if you will, was a bit of a damp day for FMCG. But the second rung oil and gas stocks rally is now well and truly underway. But I think I spoke to some smart money who said that, one, there is no news to the upsides for the second rung players, which are playing a valuation catch-up, might be capped. There is a very large upgrade on BPCL, which we'll come to as well. But that is the thing. But Samina, the point to ponder from a consumption perspective, and yesterday, other index which stood out very starkly was FMCG, right? We saw everything from HUL to Britannia to ITC being in the red yesterday. There is a question to ask based on macro data, that is a consumption slowdown underway. The non-oil, non-gold imports, which is arguably the second best indicator of consumption, down 11%. And a few days ago, we saw the inflation data showing core inflation at 3.7, which was the lowest reading in almost first sub 4% reading in almost 4 years.
Yeah.
Are we looking at a consumption slowdown? Could it hurt specific pockets? But are we looking at that in India as well? We've been talking about UK, Japan hitting those recession. Are we staring at some consumption issue in India?
My only point, Niraj, on that is while we agree that there could potentially be a slowdown coming away, the GDP numbers have not been revised downward, A. B, we've seen some of those earnings, while the rural consumption story may be showing some signs of, or may not yet be showing signs of a pickup. I mean, you've been talking to Pranjal and you indicated that while we might be now beginning to see some sort of green shoots coming from rural consumption, urban consumption continues to look good. Now, where this money is going is anybody's guess. Maybe spending in consumption is coming off, but buying assets, buying equity, buying real estate, those have been on the uptick, right? So maybe you're not going and buying clothes and new shoes, but you're buying new stock.
Which is great news, by the way.
Which could be, I mean, look at those numbers that we're seeing in terms of additions of SIPs month on month.
So maybe capex plus investment, which is good for the economy, yes. So the economy numbers, which is why RBI has probably kept it at 7%, but consumers.
And I can't disagree with you because there is nothing like decoupling, right? We talked about this a decade ago. The fact is we are tied to the world, and if the rest of the world is seeing slowdown, we may not decline as substantially, but the weakness will be felt back home as well. You talked about valuation, and what was also interesting was the move HDFC Bank finally made. In overnight trade as well, there was some sort of excitement. The stock rallied up, taking a cue from what happened in India, and finally, came to the rescue of the markets for a change in trade. Also, an interesting piece that I saw, Niraj, and you can add on this. Within the last 1 year, HDFC's ownership on the index exactly a year ago was 15%. It's now come down to 10%. Reliance Industries was, I believe, 10% a year ago, now stands at 11%. So is there a new leader? That's the big question we will want to understand and ask. We'll try and see whether these are just interim movements or whether this means more than what catches the eye for now. But we moved away from earnings season, so not too much in terms of earnings reaction. Still a few stocks that we'll be watching out for in today's day of trade. Unfortunately, bad news again, topping my list is UPL this morning. It just doesn't seem to stop. Weak numbers, brokerages downgrading the stock, and now it is the Fitch Ratings that has downgraded UPL, long-term issue default rating to BB plus from BBB minus. They've said that the last 9 months have actually been really weak for the sector, and they expect demand to continue to remain soft. And they also see that demand will continue to remain soft due to the prolonged destocking and production overcapacity, which will keep demand negative. So that is, of course, UPL. We will see may potentially see a reaction to this. But remember, the larger markets are buoyant. The stocks also corrected quite sharply. So maybe not a very bad reaction in terms of stock play this morning. Dilip Bilkon was quite the trade over the last few days. They reported earnings, remember, 2 days ago. The stock didn't do much yesterday, but the day before that saw a very sharp rally. They've been declared L1 bidder for a tender that was floated by the Water Resources Department in Madhya Pradesh. This joint venture in this education project is to the tune of 412 crores. The Lipilcon could be seen reacting to their news this morning. Another last earnings that we have EPAC Durable. They reported a profit of 4.9 crores versus a loss of 6.25 crores last year. Revenue has grown about 1%. EBITDA is up 454% to come in at 23 crores. And margins also expanded substantially at 8.5% versus 1.4%. So those are a few stocks that are on my radar. But talking about block deals, Niraj, I think the big one to discuss this morning is Yes Bank and Carlyle's reducing its stake. The fact that they came in a year ago claiming that they're backing the bank, but with a 28% run up, they've actually managed to liquidate a little bit of their stake. And of course, Morgan Stanley's come in and picked it up.
Yeah, and nothing wrong. I mean, taking some chips off the table at a point of time when we're looking at some credit tightening or rather the NIMs tightening happening for private banks by and large. That is one. But actually, speaking of block deals, the other one to focus on could also be Sudarshan Chemicals. We've been talking about this one yesterday, and chemical stocks finally seeing some bit of buying because it's a sector that's been ignored for maybe multiple quarters now, 2, 3, 4 years. But HDFC Mutual Fund has bought about 17.75 lakh shares, which is 2.5% equity in the company at 514 rupees or thereabouts. So do watch out for this one. Had a big bump up yesterday. Maybe could be more in store. You know, the list that I have is largely, I'm standing on the crutches of the brokerages this morning, but there are some interesting ones there. So BPCL had a big mammoth uptick yesterday. Jefferies has this large upgrade on BPCL. They are saying they've upgraded the stock to a buy with a price target of 890 for a BPCL from 652 current price. That's our 662 or thereabouts. So that's a significantly large upside left there. They say the Red Sea disturbances have strengthened the refining margins. The current marketing loss on diesel could be transitory is the other point that they are making. So that's the piece that because they believe that OMCs could hike their prices post-elections effectively. And they believe that BPCL offers the largest margin of safety if the multiples for oil marketing companies largely go back to the Goldilocks scenario that used to exist, and which is why something like this 2.8 times forward price to book on the target price. The only fly in the ointment is, while they are harping upon this government's not being interfering off late, could there be a price cut that could come in ahead of elections? Could well be anticipated, and could that spoil the party?
Yeah, I mean, talking about a party, that space has not just been buoyant yesterday, Niraj, but even the day before that. BPCL was up 7%, so the compounded gains on some of these counters is shocking. And you know what surprises me is, or at least in the recent past, what we've seen is if it's a good day for the OMCs, it's a bad day for the downstream, right? Upstream, downstream move into opposite directions.
Yesterday was different.
So was day before yesterday. So while you're in Oil India, ONGC gaining, you also had BPCL and HPCL gaining in the same amount of quantum. We've got Probal Sen joining us in a few minutes, so we'll understand from them what's happening. Is it? I mean, I couldn't attribute it to higher crude prices because that would mean bad news for downstream. We couldn't attribute it to lower crude prices because that also would not work well for downstream. But nevertheless, you want to come in on a few more stocks?
Yeah. The other one, Samina, is aviation. Much as we're talking about growth factors looking strong, look at what Jefferies has said on aviation stocks. Domestic air passenger traffic growth continues to slow down. It moderated to about 5% growth YOY in Jan, which is the slowest growth since COVID. So that's part one. Indigo's market share, talking about investment implications, Indigo's market share slipped to 60.2% in January, which is the lowest since Go First shutdown in May 2023. So there are some issues for Indigo. The drop in the share could well be the impact of the aircraft grounding in Q4, or frankly, the erratic scheduling that's happening, or the delays that are happening as well. And social media is agog with all things around Interglobe Aviation. But this has ramifications for both airlines like Indigo, as well as take a moment back for GMR Airports, which has had a spectacular rally, but could lower passenger traffic growth, result in lower footfalls for airport revenue. So I think that's the other piece to keep in mind, because remember, since the time GQG invested, GMR has had nearly a 50% rally from 60 to 90 in a spate of less than 2 months or thereabouts. So that's to be kept in mind. Sorry, you want to add to this?
You're talking about aviation, right? I mean, I'm sort of trying to rationalize why you would see a decline, because I don't think travel has come off that sharply.
Growth is slowed down.
Could be a few reasons. Railway travel has potentially picked up. I mean, we saw what happened in, when the match was happening, right? When there was, of course, the IPLs or the World Cup finals.
World Cup finals.
Most people used the train because you couldn't get hold of tickets. Secondly, you've also had bad travel conditions in terms of congestion. You also, only a few days ago in Mumbai, putting restrictions which led to flight cancellation. So I think all those things could have weighed in on why those numbers look weaker. I don't think it's or maybe, like I keep saying, discretionary spend is coming off and everyone's gotten wiser and smarter and putting the money in equities, but that's on a lighter note.
That's on a lighter note, yeah. But, and sorry, just one last piece here. Air India has actually strengthened its market share at a point of time when Indigo has lost. So, Vistara
and those flights
have
gotten really good, is what I've been told. I haven't flown on Air India.
No, our CEO flies 3 days a week. He's been harping about Vistara.
Are you flying to Singapore on Air India?
Air India, yes,
there you
indeed.
go. And so that's Air India. Just another, go on.
Well, one last one, sorry, is City Note on NMDC. Downgrade to a sell, target price raised to 215. They say that the domestic price at export parity currently, and therefore little volume upside, price upside and little volume upside beyond FY25. They say that the medium-term balances imply modest surplus market, likely resulting in a price correction. Even if they've upgraded the target price, it's a sell. It's a downgrade, and it's a downgrade to a sell because the valuations are one standard deviation above the long-term mean.
Just one quick one before we cut to editor's cut is a new listing. We don't, of course, we will just quickly mention that. We've got more on it during the day. Entero Healthcare, they are a healthcare product distributor. They will be debuting on the exchanges later today. The final issue price has been fixed at $12.58 per share. We'll have some more details over the premium currently is at and what sort of an expected listing is there, but that's the quick last update I have.